Hey everyone, this is your stock market recap for August 25th, 2011. My name is June and I have Chris here with me.
Hi everyone.
All right, let's take a look at the market here, S&P. So not a whole lot has changed from what we discussed on Tuesday. The market continues to be range bound, and as a result, when it's in range bound condition, it's going to be choppy. And today and yesterday was a classic example of how prices can go up, but they can immediately reverse. So right now we had a really nice tag. Actually, this morning we had a nice tag of this 20-day moving average. I think it finally managed to touch it ever so slightly right here at 1190. And that's also where the gap is. If we were to get into a closer view, you can see the market opened up and completely faded right in the morning. That's actually a bearish sign. And on the hourly view, you can see this is a huge bearish engulfing pattern, and it stalled right at the resistance of the gap. So pretty strong resistance right there. The gap, the 20-day moving average, I think someone already mentioned that on the forums. So, it failed at resistance. So a lot of strong overhead resistance that the market needs to break through, and that's going to be the next line in the sand for this for the bulls to overcome is the 1190 level, and after that will be the 1210. So quite a strong zone of resistance right there. And conversely, of course, we still have this 1120 level as support. Now, if you were to go into even a shorter time frame, some might even call this some kind of a head and shoulders that's forming on a small time frame here with the neckline at 1155. You can see here's the left shoulder, the head, and then a mini right shoulder right there. So pattern-wise, you don't want to ignore this. There's a chance that if we break under today's low, then there's a good chance the market can probably head lower. Most likely, if we were to take the simple projection of the head and shoulders, it more or less coincides with back down to this level here of this prior support. So give or take around that level, which doesn't surprise me because we're still in the range bound, and as long as we're above this level, it can pretty much chop around in this range here. Now, so far on Tuesday, we presented the idea of possible box range and also possible triangle, and so far the triangle looks like it's edging out so far as the possible pattern. So that means if we do get that break of that head and shoulders I told you about just now, get a retest, maybe another bounce up, and then finally a break under of the triangle right there. So that's something to consider. Always keep in mind of all the different possible patterns that can take place, and this is one of them. Chris, anything you want to add here?
Actually, if we look at today's candlestick pattern, we have a black candle wrapping on a white candle, and that's a bearish engulf pattern. And the thing is, because when the market's stuck in a box range, let's say you get a candlestick signal in the middle of the box range, it doesn't really have that much significance. And especially because where this bearish engulf pattern is right now, I mean, if the market does sell off, we're just going to hit support at the bottom of that range. And that's just the best way we could take away from this, is that if there's some follow through tomorrow, move under today's low, then the market's most likely going to move down and test the bottom of that box range. Now, if the market gets above today's high, which is the high of the bearish engulf pattern, then we'll probably see it hit the top of that box range. Also, if it gets above today's high, it'd be getting above the 20-day exponential moving average. But since that's all we can do when we see the candlestick patterns. If we see this, then this is most likely to happen. If this happens, that happens, and that's how we create our game plan each and every day to go into the markets.
Yeah, it's really about if-then situation. If the market breaks support, then we'll go ahead and short this or buy puts, or if the market breaks resistance, then we'll go ahead and buy calls or buy stock. It's much better, I think, takes away the emotion as opposed to just, oh, I think, or the market looks like it's going to go down, so I'm just going to go ahead and buy puts. So you have a more objective entry level where the price tells you to go in as opposed to your own biasness telling you to go in. Let's go ahead and take a look at a few stocks just in case. Again, you want to have stocks on your watch list just in case if anything does happen. Now, if we get some upside potential here, then this would be a pretty good stock to buy. This is SGI. So it's forming a nice flag, nice high volume gap up on good earnings right here. And it's basing right now. So I think a break above 1550, a little more conservative, you might want to wait for it to get above 16. But I think above 1550 will be a good trade above there. But if it breaks down from this triangle, then obviously that pattern is no longer valid. So this is something I'm keeping my eye on in case the market decides if it wants to get higher again. On the flip side, we have Best Buy, which is something I mentioned before, but hasn't exactly broken down yet. I would say probably under 23 would be a good entry into shorts. Right there, make sure it gets out of this range because while it's in this range, it can tend to be a bit choppy. So I'll definitely keep my eye on this one for more downside potential there. And then a quick one, maybe even a day trade tomorrow, is Amazon. Now Amazon made a nice pullback back towards its 20-day, just like the market. And going into a shorter time frame, you can see that support at 190 is holding very well. Okay, almost forming a base. So quite honestly, it can really go either way, either to the upside or to the downside. So if it breaks 190, then that would make for a pretty decent day trade. You can actually buy either at the money or just slightly out of the money weekly puts which expire tomorrow. And believe me, if this thing takes off, that 10 cents, that 15 cents put can easily become 50 cents, 60 cents, etc. I'm being hopeful. I want to shoot for like a couple of bucks, but depends how hard Amazon drops. If it does drop, actually. But that's something I'll keep my eye on, and especially if it breaks above 195, then I might consider some calls on that respect. All right, Chris, what do you have for us?
It's kind of the same stuff that we had went over on Tuesday, but I just want to give some updates. SINA, S-I-N-A, it's still in a triangle forming, so nothing much really going on with that stock. We're still gonna. It's just on our watch list. IPGP, still looking pretty good on the short side on a move under 50.
Mm-hmm.
Next stock that I want to take a look, CATM. Now this was already triggered yesterday when it got above 23, and today it formed a bearish engulf pattern, and it looks, it closed right where the entry was, very close to it. My stop on this stock is at $22.70. So it's under today's low, I think, but it's about 30 cents, 35 cents stop. And that's just one of the reasons why I picked this trade, is because we're risking about 30, 35, and we were aiming for a buck 50 or something. So always love that risk to reward. Last thing for aggressive traders, PEET, P-E-E-T, man, my favorite stock to the upside, used to be. Looks like it wants to get under the lows around $52.40 or so. That prior resistance level now turned to support, and it gets under there, then we can see PEET moving back lower.
Okay, very good. Let's talk about BAC since that's the headline today. So here's the thing. Very nice gap up. Didn't really hold the highs on very extremely high volume here. But the main thing is, this stock is still in a downtrend. It's not out of the woods yet because it's still underneath this 50-day moving average. Granted that it's now trading above, or actually just closing right at the 20-day today. What I like to see for this stock to do is form some kind of a base. At least hold above this gap, or at least hold above $7. That's the ideal situation. I mentioned before that I'm not the one to really call for tops or bottoms, or at least buy it at the top or sell it. Buy at the bottom and sell at the top. But what I like for this stock to do is form that higher low. If it forms a higher low, then that's a better sign, a more confirming, reassuring sign that this stock might actually be bottoming or trying to form some kind of a base. So what I like to see is, now that it's popped higher, either pull back or go sideways, But the main thing is stay above $7. If it falls below 7, then I might be skeptical about this gap up. But as long as it stays above that, then I would consider to see what kind of pattern it forms. And once it breaks out of the pattern, then that could be a decent buy into BAC. So right now I'm on a watching this stock, not really taking a position. Although someone did mention some naked puts around 7, a weekly naked put around 7, which I think is a pretty good idea, because if we suspect or we assume that BAC will just chop around here for a little bit, allow people to kind of digest the news, then more than likely it should stay above 7. And if it breaks underneath 7, then I'll exit those naked puts or stock if you actually have stock on this position. So that's something to play in the meantime while you're waiting for the stock to just kind of digest the news out there. And then let's talk about gold a little bit. Now gold actually broke its 20-day moving average. It pierced it, but it managed to crawl back up towards above it. But you have to notice that volume is a little bit lower than yesterday's volume. So the buying pressure today seemed more like an oversold bounce than anything else, okay? Because the selling pressure was so intense yesterday. And going into an hourly view, you can see the hourly stochastic was oversold. So it was no surprise to especially see a gap down today that prices kind of crawled back up. But look for some kind of resistance around these moving averages, around these hourly moving averages, because now the roles have reversed, right? Before these moving averages acted as support, now that it broke through it, there's a good chance it might act as resistance. So we'll pay attention to that. So if you want to continue shorting gold, for the time being at least, look for some kind of failure either around the 20-hour moving average, around that level. So that's something to consider, and then it could probably pull back all the way to this 50-day moving average if that's the case. The other scenario is maybe gold would just go sideways from here. That's also the case. It doesn't always have to plummet and fall down, from the face of the earth. It can also just go sideways. If enough buyers think that this is a reasonable price to jump back in, then it should hold gold or GLD at that price level. But I think there's still quite a bit of people who still want to hold gold, so I'm not sure if it will plummet as hard as silver, but we have seen some pretty intense selling those last couple of days, so anything can happen, right? Anything can happen. Anything you want to talk about here for gold or BAC or anything, Chris?
Actually, we've covered basically all that needs to be covered, especially for today. I know I sound like a broken record, but it's going to be the same thing all the time. Just for now, is just be very conservative in all of your trading positions right now.
Yeah, that's about it, and just take it day by day. Tomorrow is, I think people are anticipating Bernanke's speech, so whatever happens will happen. But based on the charts alone, there's a good chance we can probably head lower tomorrow. Especially if that neckline of that little head and shoulders break. So, pay attention to that and watch for that breakage of support. If it holds, then that might be actually a nice bullish sign right there. All right, guys, then we'll talk to you tomorrow in the forums.